based on price action, then this one indicator will be your holy grail. It will automatically do the hard lifting for you by identifying market structure, fair value gaps, and order blocks, so you can focus on the important stuff. Literally, all you have to do is press the buy or sell button. Whenever this indicator prints out a setup in this video, we will cover everything you need to know about this indicator and how you can use it to improve your trading. Smart money concept gone viral over the last year and everyone's trading them. But for those of you who are not familiar yet, we'll summarize it quickly. Basically, trading only using price action with no indicators or patterns deviating from the traditional trading styles using market structure, order blocks, and imbalances along with liquidity. Smart money traders are able to identify exits and entries for trades. However, this can be a lot of work on your side. So this one free indicator covers everything about smart money concept, making it easier for new traders to succeed to find it. We're going to go to TradingView.com, as always in the Indicators tab. We're going to pull it down to the search bar and type in Smart Money Concepts by Lux Algo. After enabling this indicator, you'll see that order block structure and liquidity are marked out for you to turn on F-value gaps, which you want to do. Go to the settings of the indicator and scroll down to turn it on. I suggest extending them to 5 points. This helps you see them better on the chart. This indicator at first may seem very advanced to you, especially if you're a new user. But after watching this video, you will learn all the terms and how to effectively use this indicator to profit in trading. First, we'll start out with market structure. This will be displayed by structure, and C stands for change of character. Both are going to be important. The difference between them is the amount of structure or the severity of the break. So the change of character will be displayed when the most recent swing high or low are broken with a candle close above or below the swing point. When break of structure is displayed, it means that a second swing high or low was broken. You'll also notice some different types of lines. There's one with a dashed line and one with a solid, thicker line. The structure with dashes or internal structure, that is basically structure inside of a bigger price lake. This would be swing structure. Swing structure are the big solid lines, and this is a more significant higher time frame. Break of structure, this is going to be a more critical signal in the market structure section. We can also see 2 additional options that we can turn on. We have swing points and strong or weak highs and lows. I recommend playing around with these and seeing what works best for you. But when we turn on swing points, we can see more labels are added to our chart. This option is to highlight significant points of structure, like whenever it makes a higher high or lower high, etc. Strong or weak highs and lows are specific points of structure that meet this criteria. A strong high has broken past the swing low. So now that high should be strong and it shouldn't be taken out. The same goes for a strong low. It has made a higher high. Next, we're going to talk about order blocks. Order blocks are an area where support and resistance are likely found and can offer potentially excellent entries for trades. We have 2 types of order blocks, internal and swing. Just like structure, swing order blocks are more significant and on a higher time frame compared to the internal order blocks, which we typically see inside the swing structure. We also have fair value gaps, something I'm sure you've heard of and are a critical tool in my trading. These are imbalances on the chart that are made up of 3 candlesticks. A bullish fair value gap is marked as a green box on the chart designating support, and a bearish fair value gap is marked in a red box signaling resistance. These areas can act as magnets for price, and typically we expect price to gravitate towards them. Is equal highs and lows. Turning on this option in settings will show you areas of equal highs and equal lows. These are areas where liquidity is resting, meaning there's likely a large amount of stop losses located just above or below them. Coming in next is MTF levels, meaning mid-time frame levels. You can turn this on and then there'll be 3 levels. There are also areas of liquidity, and these can present great trading opportunities. Remember, every time frame is valid in trading, but the bigger the time frame, the less prone to manipulation they are. And as traders, finally, we have premium and discount zones. Basically, it marks out the local range of the market and divides it with an equilibrium point. This is the midpoint between the premium and the discount areas. Premium we basically view as expensive, and discount we basically view as undervalued for higher probability trades. You want to sell when we're at premium and buy when we're at discount exclusively. Now that The first example, we'll use the default settings, but we're going to turn off all the order blocks and turn on fair value gaps. Also, we'll disable the auto threshold and extend it up to 5 points. Lastly, we'll turn on swing points in this example. We're looking at Ethereum, and what we can see is that it's been ranging for a long time. What we see the indicator doing is highlighting that it's making higher highs and higher lows. Then we see a change of character following up by a break of structure. A big impulsive candle shows that the momentum came in and played out on the chart. What we want to do is wait for price to trade below the midpoint of the fair value gap. We also have confluence of the previous highs. We can enter long at that area with our stop just below the fair value gap, and our target can be a 1 to 2 or a 1 to 3 risk reward, and we're only going to be using the internal order blocks and market structure for this. First thing we want is a trending market. Whether it's up or down in this example, we have a bullish case indicated by our higher highs and again higher lows. First, we want to see a low taken out. This is logical because this is where liquidity is resting. After our stop hunt is over, we want to see an order block paint, but we also want it to break structure, or we can wait for price to tap the area first and enter based on reaction with a market order. So now we can drop down to a lower time frame and wait for this break of structure. We can then enter on a newly created fair value gap or order block with our stop loss below the most recent swing low, and we can target panel and get access to high-quality, expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently. So click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned. I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.